Joining us now for more is Matt Orton, Chief Market Strategist at Raymond James, and here on set with us, Sarat, Sethi, Managing Partner and Portfolio Manager at DCLA. He's also a CNBC contributor with us for the hour, if I'm not mistaken,
so, yeah.
Sarat, so welcome. Matt, quickly to you, does today provide a cautionary tale of investing in defense companies for that reason? Because they're all lower on these ceasefires. So can the long-term spending goals offset the geopolitical risk premium that may be coming out of them?
Hey, Kelly, it's always great to see you, and I think they absolutely can. It's not at all surprised to see the market selling off a little bit on the encouraging news we've had with the ceasefire between Iran and Israel. But at the end of the day, moving from the target at NATO of 2% to something that's now going to be 5%, that's a very, very big deal. And I think there's a lot of support that is President Trump's primary goal is to get that objective. And if you break down that 5% goal, 3.5% of that is coming from hard defense spending. 1.5% of that goal is going to come from defense infrastructure related spending, like cybersecurity. And so when I look at the defense space, I think companies that are levered to defense electronics, defense communications, areas that straddle both of those ponds of spending, those are going to be the big winners going forward. And so that's the theme that I think is durable. And similar to what we've talked about in the past, I would use downside opportunistically in some of these names. If you get more of a pullback, I think this is the time to reload because I expect earnings to be solid, visibility to be solid. And these are all high quality investments generating increasing free cash flow.
Yeah.
And if you lean into the electronics, you'll be set.
Do you, Sarat, think it's an opportunity, a sell-off day like today?
I would look at it 2 ways. I think the stocks have done really well, and my question is more durability as to, again, what happens when you have a new administration? What happens when 3 to 5 years from now, you kind of look back and say, hey, do we need to be doing this? Mm-hmm. And the sustainability of that earnings power. But I do agree there are some great companies out there.
The viability of the targets. I mean, they say 3.5% on core defense spending, 1.5% on related. And they're having a hard time. They could sign a piece of paper and say we're going to hit that. But
and the analogy I have is kind of Airbus and Boeing. I mean, you know the orders Boeing and Airbus are expecting, right, for the next 30 years. But that's not built into the stock price either. And yes, Boeing has its own issues and it's kind of resolve it. But if you actually said Airbus has all these true orders, the stock should be way higher because it's almost guaranteed cash flow. But you know things change and companies might say, I don't want this aircraft or I extend it, et cetera. So I do think you buy them on dips, but you have to make sure, I think, you've had that opportunity in that big run, but you'll get kind of some trading opportunity.
Matt, though, listen, the market story is so much more dramatic than that the last 3 months. 2.5 months ago, national news shows were leading with we're doomed and retirees are being wiped out and everything's ruined. And now we're going to close at a record high today, most likely, on the NASDAQ 100. What happened? Is that because the president backed off tariffs? Is it the pause? Is it something else?
Yeah, it's a great question, Brian, and one that a lot of clients continue to ask because I think they're perpetually surprised by the ability of the market to scale this wall of worry. And I think the primary reason why that continues to happen is because sentiment remains low. I would argue that positioning still isn't at exuberance with respect to this market, and we're in the process of recalibrating to uncertainty. We came into this year knowing that uncertainty was going to be high, but I think Liberation Day caught many investors off guard, and as a result, we've all been too pessimistic about where this market can go. And so I think that continued climbing of the wall of worry, earnings coming in better than expected, hopefully seeing more trade deals signed going forward, all of those marginal pieces fit into the greater market narrative that you can continue to move higher. And I think the main thing that will propel the market to sustain all-time highs, if we hit them, is earnings. It's all going to come down to companies delivering on the expectations that are built in. And I think selectivity becomes more important. There's more dispersion out there, and that's why you want to lean into longer-term durable themes like defense and electronics.
Listen, there's nothing wrong with making mistakes, Sarat. We all make mistakes in all facets of our lives. And I think it seems clear the markets viewed the tariff liberation day as a mistake. Maybe the Peter Navarro camp winning out at the time was not the right way to go. Kind of pushed that to the side. I think the Bessett camp kind of took over, as I said at the time, by the way. Do you feel like we've learned from maybe those trade mistakes?
Well, I think that the market learned quickly it was a self-inflicted wound that had the ability to kind of readjust.
I punched myself in the face.
Yeah,
basically.
And it said, I'm doing this to myself. So how do we not hurt ourselves as much? You have a big, beautiful bill. We're not really sure where that's going to fall out. And then, you essentially are looking forward to the tariff issue where, companies are now saying it's not going to be as bad as we think it is. So we'll see kind of where that goes as well. So I think all that said, and you have a potential of lower interest rates going down. The other thing I think today, if you notice, is oil's come down again. So that, if we were talking 2-3 days ago, it'd be like, wait, are we going to $110? Are we going to $90? Because that is a big governor on the stock market. So all those things are you probably have a lot of short squeeze going on today too, just in terms of, hey, it's not as bad as it is.